Hey, good evening, y'all. Good evening, good evening, good evening, good evening. Sunday, July, what is it, the 6th or the 7th? About to get into this weekly forecast and analysis for gold up in this thing. Got my cup of mud. Be ready for the fight tonight. But as we can see, y'all, gold was super bullish to end the week last week. As we can see, gold gave us, we got a major dip right here from this news where we got a 2376 to 2350. And on some charts and brokerages, I actually saw price, according to them, had dropped to like 2344 or 46. So gold moved like 400 pips in like 10 seconds last week when the news happened. It went 400 pips this way and then 400 pips back up, and then it gave a couple sales, and then it just took off the rest of the way. Now we're gonna go out to a more broad view of the market in 4 hour. We can see that price has been pretty much consolidated, and when I say consolidated, um, dealing with gold from my experience, I mean, four or 500 pips can be a consolidation, especially when gold has been. Let's go to a day chart. Especially when gold has been doing this. When you're dealing with days, we see that gold is completely bullish. Gold is going to continue to go up as long as we have world economic strife. I'm gonna start off my charting by marking that. All right, when I go to the day, and I go all the way back to November of last year or October of last year, I can see that gold has been bullish, right? When I say bullish, I mean that it's in an upward path. Or price is getting higher and higher and higher, right? Now, what do I want to compare this to? My way of comparing gold in accordance with the world economy is to compare the chart to gold with the chart of the US dollar index. The US dollar index, or the DXY doxy, however you want to pronounce it, I'm going to switch to that chart. The doxy is how we measure the performance of the US dollar, right? Or the US fiat currency, right? And we can see that when we go to the, let me get rid of this Fibonacci, what I was using to just measure some stuff the last time I was in here, I guess. If we look at the same chart from the same time period from around October, right, and we can go back to October, but we can see that the dollar took its initial dump around the same time as gold started its bull run, right? But ever since that has happened, right, we see that we have the exact, not exact, but we have a very similar chart when we go to the dollar, right? So a lot of the time I've been telling my accountability partners with trading and just some of the people that I deal with in my community that I felt as though the dollar and gold were moving simultaneously. And when I said simultaneously, I didn't mean that every dip that the dollar takes or every gain that the dollar takes, gold will take. What I meant was that these charts are so similar, right? Meaning that the dollar is bullish, and then we switch to the gold chart. Did I erase it? What the what's going on here? What did I do? Okay, there we go. But if we look, that's gold. That's the dollar. So we see that the dollar, right, is being manipulated, right, in accordance with gold. That is the United States strategy for keeping the strength or the reserve power, right, of the US dollar. They are the ones that uh, took fiat currencies off of the gold standard. They are the ones that manipulated the market. And give me a second. Let me close the trade that I was in. Oh, it's gonna close itself. Let me just check my take profit. Oh, it closed right on time. But yeah, that was a good one. I just killed 25 pips on this last little baby little dip in this candle. But what we take from this is that um if we study and watch the dollar index, we can be more in tune with what gold will do, right? And being that they don't move simultaneously up or down or whatever, we can know that if the dollar is bullish, right, then gold will. It may dip off, but eventually it will turn and it will start to move into a bullish pattern with the dollar. So that's a tip that I just wanted to share with you guys before I went into the forecast or my charting that I want to do for the week coming. So I'm gonna leave the day chart and I'm gonna go down to a 4 hour chart. And on the 4 hour chart, we can see that we just above that trend. This is our trend line, right? So we're right above that trend. All right, so now what we want to do is we want to, before we start marking out our trends, what we want to do, what I like to do, is I like to go back at least 1 month, which would be back to somewhere around June 4th, June 8th, June, the beginning of the month of June. What I like to do is I like to go in and I like to find patterns, candle patterns that um, we can identify and use. Now, why we use them, there's a couple of different things that we use them for. But I particularly find zones that I feel as though the market will return to. And when the market returns to those points, it just depends on who has the momentum, right? And which way the market will go. So you're going to see people that refer to these by all different kinds of names. So don't hold me to what I refer to it as. If you hear somebody else and they refer to it a different way, they was right. Just put it at that to keep anybody from beefing with the way I teach what I do. But what I like to do is I like to go in, I like to look for simple candle patterns, right? Like right here, right? This candle, right? This green candle with the long upper wick, short lower wick, right? I would consider that candle to be an evening star, right? So that's a single candle pattern, one candle, right? So now this evening star lets me know that price got rejected because price pushed up and then came back down and we got a close right here. So that let me know that price went up, got rejected, and got pushed down. So this is a location that we can mark or that I would mark because I would say, okay, this is the point in which the sellers are going to come into the market when the market reaches that point, anytime going right on my charts, right? So that's a single candle pattern. And I try to tell people to find a candle pattern that you're familiar with, that's easy for you, and trade that candle pattern. All right, just only trade that candle pattern when you see it. As you see, we're gonna have these same patterns forming over and over again. So you will not miss a chance unless you got an 8 candle pattern that you pick to be your favorite. I suggest uh, 1 to 4, maybe 5 candle patterns, and there are other candle patterns that are important. But when it comes down to marking these equilibrium zones, I tend to stick with the lower count in candles for the pattern. 1 candle, 2 candles, 3 candles, 4 candles max. So we got an evening star here. So I mark that. I come over and I say, okay, we got a drop base drop right here. We got a drop, right? Base, and then another drop candle, right? So I mark this. Where was that? Here. All right. And I'm on a 4 hour chart and I don't have the candle spread out far. So that doesn't look like a lot of space, but that's uh 200 pips in movement, right? So I'm not gonna mark all of these, right? But what I am gonna do is I'm gonna mark it at certain levels, right? So here I see that the market found some support, right? So I don't really have a candle pattern that I'm happy with. We got kind of like a little morning star or a hammer here, but I'm not satisfied with that. So I go further left to find that equilibrium, or what I consider that equilibrium, right? And where the market seemed to have either found resistance or support at that level. And if we keep going back, we come here. And I'm gonna mark this. It is a bullish engulfing, right? But it's also a morning star, right? What I mean by a morning star is it's at the bottom of the candle prior to it, right? And the candle next to it, right? You got a fairly decent wick on the top, fairly decent wick on the bottom. So I would consider this a morning star candle, right? It's also a bullish engulfing because we got a bullish candle that engulfs the bearish candle or candle. So I would mark that bearish candle. And I always mark the top of the candle. That's my particular way of doing it. I've seen people mark out and use tools like this, and they would box out that entire thing. But just being me and working with the tools that I'm comfortable with using, I just use the horizontal line from there all the way, and it automatically fills it all the way down to eternity on the chart. So I know anytime the market comes to that area, I'm gonna find support or either resistance. Right? And we can see that. All right, so I'm gonna go back to where I got that. And being that I'm working with a very tight zone and we don't have a lot of data from this price range because we're dealing with all-time highs in gold. There's not a lot of charting in these prices, so you got to kind of be very careful with taking your positions and trading because this is like uncharted territory, as that would say, and literally uncharted territory. So what we want to do is we want to find these levels, and I call them equilibrium, right? And when I mean equilibrium, I mean this is an area where the market is going to get into a fight between the bearish traders and the bullish traders, and may the best man win. And basically, depending on which direction the market is coming from, dealing with these equilibrium zones, is generally going to be how I decide to take my position. So the market is coming down to this equilibrium. So I would be looking to wait for the market to hit my equilibrium zone because I know that buyers are going to be there and the market is going to find, if not any, a little, or not, if not a lot, at very least a little bit of support, and I'm going to be able to get me some nice 30, 40, 50 pip trades on a possible either just a retracement or correction in the market or a reversal. So that's the reason I do this. It's the same way when you're dealing with the market coming from the top of one of these equilibriums. And it came up and it hit this equilibrium as we possibly will see soon. And that's just a little heads up. I think gold is going to be bullish this week. And I think we will set a new all-time high this week. Cat out of the bag early. But this is how I find my positions. Knowing that the market or having an idea that the market is going to go up this week does nothing for me having to place my actual positions this week. So another one right here. We got a major bearish engulfing. So I'm gonna mark this trap bullish candle right there. Equilibrium. I'm gonna come on down, and I'm pretty much satisfied with that because this is more like a little zone that we can see price come to, and we can see when price came back to this equilibrium. See, we got a little resistance, and you might have been able to catch a sell in that 4-hour candle right there. We spread it out, you can see the real movement 23.90 to 23.84, 60 pips. So if you had took a position, you was looking at 60 pips right there. And then you got the same 60 pips right back on the buy. But that is how I begin. I mark out these zones. All right, there's another one. And something I suggest is anytime you come into the market, you can come right here to this trash can. If you can see it at the bottom left of the screen, and you can remove your drawings, you can remove your indicators, or you can remove it all at one time. I always come on and I remove my drawings. If you hit remove indicators, it's going to take whatever indicators you got starred as favorites, and it's going to remove them. So just remove your drawings, and always at the bare minimum, do your charts at the beginning of the week. Because don't much change except for the short-term trend lines, but you still want to be marking out your charts. Now we're getting to, okay, I got my equilibrium, so now I'm not too much worried about a lot of the past, but there are some things that I do want from the left. From the left, I see that I got a high here, I got a lower high here, and then another lower high. So what I would do is I would connect these with just a basic arrow. And they don't have to touch or be perfect or none of that. I cut the wick out of this one, and I will do that. All right. Now what I would do is I would mark this trend, spread it out. I would mark this little trend, this upward push. This is literally what I do to prepare my charts to trade. It works for me. Anybody that feels that they have a different or better way, power to them. Now what I would do is I would want to take this trend line up to this equilibrium. Right. And now what I would do, this is the simpleness of the strategy of trading that I use. There's no rocket science involved, right? All we're doing is buying and selling based on these equilibrium zones, right? In accordance with our trend lines as we add them as the market changes. All right, so now I'm gonna go down to a 1 hour to see what more info we can find, what kind of data we can get. Strictly from the candles. I don't want the indicators to tell me anything, because the indicators will manipulate your thinking in the way that you see the market. So now what I would do is being that I had a little bit better look at this, I would want to cut straight through that because I want that to be a part of my chart. So that's how I would set that up. 15-minute chart or 1 hour chart that I had going down to. I would just adjust my that trend line. I would not be looking for much more, but one thing that I would do to kind of find a little bit more is I would mark this trend. Because what I want to do is I want to mark these trends and these momentum shifts in the market because what they create is now you see a bunch of lines on my chart. And what I use these lines that I put on my chart for are support and resistance. Anything that is on my chart that is not a candlestick is support and resistance. I acknowledge it as support and resistance. Even my indicators, if I turn them on. When I turn my indicators on, the outlines or any line or any part that can be measured, I'm going to look at it as support and resistance. Let me explain this. I'm going to turn on Ichimoku Cloud. All right, make it a little bit bigger. What I mean is, I'm going to look at the bottom of the cloud, right, when the candles are below it as resistance. And I'm going to look at the top of the cloud when the candles are above it as support, right? And if the candles break my support, you see how this long candle came down, dipped, found support, and bought. The green cloud is going to be bullish momentum, so it's going to be a support. The red cloud is going to be bearish momentum, so it's going to be a resistance, right? And you can see every time it comes up, resistance, 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 until the market gets the momentum to break through that red cloud or down through the green cloud, right? And generally with the cloud, that is the only thing I use it for. I just know, okay, if the cloud is green, eventually the candles are going to have to fall through it. If the cloud is red, eventually the candles are going to have to go up through it, right? That is the only thing that I use the cloud for. Nothing more, nothing less. And that's me personally, right? The lagging line or the lagging span, right, which is a part of the cloud. I take all of the other spans that they have on, and the only one I leave on is the lagging span, because what that's going to indicate is that's going to let me know when these candles are going to fall through this cloud. When this lagging span of the cloud breaks through my candle pattern, I know that the candles will then fall through the cloud, right? And we can go here and we can see as this broke through my candle pattern here, the candles followed and broke through the cloud. As the lagging line went and broke through the cloud going up, the candles broke through. And that's generally what I use the cloud for. I always tell you guys, do not use indicators to tell you what to do in the market. By the time this lagging span crosses through and gives you that signal that the candles will go, you should already be in your positions, right? We only use indicators for confirmations, but those would be confirmations of that in those instances. I'm going to turn the cloud back on and finish doing my charting. I'm going to go down to 15-minute chart now. Generally, a 15-minute chart is where I do most of my trading. I like a 15-minute chart because of the quality of the positions that I'm able to find when I'm using a 15-minute chart. I can trade from a 1-minute chart, but it's a different strategy that you have to use. You can trade from a 5-minute chart, but there's a different strategy that you have to use. Beginners, I do not suggest you try to trade on these lower time frames. I suggest that you try to trade a 10-minute and up chart, all the way up to 4 hour. The reason for that is the positions and the information that you will get will give you a little bit more leeway. When I say leeway, you ain't really trying to squeeze your position. So on a 15-minute chart, right, we can get 50 pips in a 15-minute candle. Right? We got one 15-minute candle, right? 2374 to 2384. That's 100 pips in one candle, which means 15 minutes. In 15 minutes, you can get 100 pips from trading any type of time frame chart that you want to trade. But in my opinion, the 1 minute and the 3 minute and the 5 minute will confuse you because of the swings in the market. And we're just going to go to the time. This 15-minute candle was at 10 a.m. Right? So now we're going to go down to a 3-minute candle. Right? And now we're going to have to go all the way here. And this 10 o'clock, that 1:10 o'clock candle is 15 or 5 of these 1 minute, 3-minute candles. So these candles represent one candle on the 15-minute chart, right? What can happen is, and I'm going to try to find a situation like this right here. If you're trading a 3-minute chart, you're going to get lost right here. Because 1 minute, you're going to think it's a buy. As soon as you get in a buy, it's a sell. Then it's a buy, then it's a sell. Right? We don't want that. We don't want to trade up and down markets. We want to trade or attempt to trade with the flow of the market. We want to ride with a flow. Right? We don't want to try to get in here and figure out which way it's going to go next on the next couple candles. We want to wait for our time. Right? That's why I tell people patience is the key. We want to find positions and then wait for our time. We want to wait for the market to come to us. So we want to get in the market. We want to analyze and come up with our idea on where the market is going to go. And then we pick our positions and we sit and wait for the market to come to us instead of us chasing the market. So I'm on a 15-minute chart. As we can see, I'm definitely looking for gold to be bullish, as I said. But what we can, in my opinion, count on seeing is gold going to come up, going to come down. I believe gold will come back down to around here in the London market this morning or tomorrow morning. Right? I do believe it will come down somewhere. And it may not come back down completely to this equilibrium, but I'm definitely going to be looking for, being that price came up, hit the top of this, or find this equilibrium zone. I'm definitely going to be looking for some resistance or some sellers. And just knowing the nature of the Tokyo London market, I know that they generally, Tokyo, when the Aussie market closes, Tokyo tends to dump off gold. Right, so we look for gold to come back down somewhere in this area. And when London comes into the market, let me start with the tool over. I clicked it too many times. I'm looking for the market to come up, meet resistance a little later this evening. and then drop. And when it drops tomorrow, what we're gonna see happen is it's gonna come up, and then the market is just gonna day after day. And I'm on a 15-minute chart, so don't I keep clicking off of the thing and it stops it. But I'm looking for it to come up, come down, and then go crazy and set a possibly all-time new high. When this week, I'm not sure. So this can be stretched out however you want to stretch it. But I do believe that this is what we will see in the gold market this week. Everything is saying it. Crypto is taking a dump, right? Everything is taking a dump. Stock market, everything. The two things that are going up is gold and the US dollar, right? So, I'm not a financial advisor and I'm not no economist or nothing, but my strategy works for me. The way I see the economy has been working for me. So I would share that with you guys, but like I said, I'm not a financial advisor. I don't tell people uh, anything about finances, right? I share how I trade and what I do to get money out of the market. This is what I see as a possibility for gold. Another thing that could happen is we could get some news. We see we got all this news, right? We got Chair Powell, inflation, news, right? Lots and lots and lots of market manipulation this week. So I'm definitely thinking that gold is going to go up because they are not going to be able to cut interest rates, right? They may even hike them, right? And what that's going to do is that's going to give strength to the dollar, right? Inflation has slowed but not stopped. Inflation is never going to end. Inflation will always happen. Inflation has always happened. It's natural when you create a system of money, right? Because eventually the money will lose its value because it can be created from nothing. You can make money out of just paper and ink, right? Gold can't be created. You can only find it in the ground, right? So it has to be based on something. This gold price is based on the gold that is discovered in the ground, right? Gold will always pain in my back. My back been killing me. I heard it. I was just moving. But excuse me, y'all. If we look at gold from the beginning of forever, gold always is on a bull run. Gold is always on a bull run, and we can look all the way from the time of dinosaurs here, right? In 1938, an ounce of gold was $6.12, right? 1938. So that's almost what 100 and something years, almost 100 years. 2038 will be 100 years. But I mean, gold has 10,000x, meaning that in 1938 we had fiat, we had dollars, we had coins, right? But gold continually, no matter what, will cost you more and more and more and more of the fiat currencies, no matter what. That's why when I saw what the United States was doing with the dollar index, right, they are manipulating the market with Fed Chair Powell testimony, Fed Chair Powell speech. Come on, man. How much do we need to hear from this guy? Every couple of days, and then he come on and tell us what we're gonna get from these numbers anyway if we would just wait until these numbers came out. But no, they want to manipulate and control the market, right? And why is that? They understand that if they can keep the US dollar tracking, right, tracking gold, then the US dollar will always remain as the world's reserve currency. That is the trick to their game. That is why they are not worried about certain other currencies and financial systems and ways that uh, underprivileged countries are putting together to try and affect the U.S. and the U.S. dollar's uh, status as the world reserve currency. But one thing I know is, I've been to a couple different continents and countries and stuff. I know that I can spend my dollar anywhere on the earth. I can take my dollar anywhere on the face of earth and spend it, right? What else can I take anywhere else and barter it? Nobody will turn it down. Gold, right? We know that there are places where you can't even speak about digital currencies, right? My understanding is that most digital currencies track Bitcoin. Bitcoin is the leader, and the other digital currencies, cryptocurrencies, whatever you want to refer to them, they track Bitcoin. Bitcoin tracks the S&P 500. If you were to look at the S&P 500 and a Bitcoin chart, you would see that they track one another, just like gold and the dollar. One may start being bullish before the other, but the other will follow, which is what we mean when we say track. So kind of find whatever you're trading, and you can use these strategies with these equilibrium zones for anything. That is how I track uh, the couple cryptos that I play with, the stocks that I play with, and most importantly, gold. Um, these simple lines or charts, as we call them, are the key to being an effective trader and the key to analyzing and being prepared to find the positions in the market. I'm going to save this for the week. And this is what I'm looking for during the week. And I'm just going to use this as a kind of marker, but I'm definitely looking for the market to move in this area for the week. Not that low. I'm sorry. Definitely in this green area. So I'm looking for it to set a new high, right? And the high on the year is 2450. So if we get another 700 pips and gold, and they go to 2451, we set a new all-time high. But I do believe that the market is in that direction for the week. We can go back to our uh, 1 hour chart. I'm going to take this out of our way. But if we go back to our 1 hour chart, we can see that this downward trend, right? It broke it. It broke that structure, right? So now we're looking for it to go up. This that was once support will act as resistance, right? So we're going to see price go up in between this, up, down, up, down, up, down. When it comes down, we'll buy. When it comes up and touches, we'll sell, buy, sell, buy, sell, buy, sell. That is pretty much going to be my analysis for the week. I will go down to a little bit lower time frame, 15-minute chart. And those of you that are in VIP signal group, we can analyze and watch it together. Anybody's welcome to stay and watch with us as we extract us some pips out of the market tonight. But a lot of times you see my charts, they have these lines all over the place. You're barely gonna see me with the indicators showing because I don't want the indicators to cloud my thinking and what I see in the market. The indicators will kind of fool you into seeing what the market wants you to see, and that's where you're gonna be wrong. So a lot of times I just use the indicator. Like right now, okay, we see this up here at the top of that zone. So what does that mean? We're looking for resistance. So we're looking for price to come back up and find this resistance again, and eventually we're gonna get a sell for gold. But we don't want to just jump in the market looking for stuff. Let's turn on the cloud, and that's the first thing I do. Okay, so now with the cloud, first thing, green cloud, candles going down, right? Lagging line, when it breaks through the candle patterns, what normally happens? The candles fall through the cloud. So what we're gonna do is we see it dropping right now, but I'm from Missouri, show me state, and I don't believe it's gonna go all the way down right now. I do believe the candle will find support on the cloud at first. We're gonna get what I like to call a dead man kick, which will be the last bullish push before we get the sell off or a correction or whatever. And we could be looking for price to push anywhere down to around 2370, 2365, possibly all the way down to find support at 2359.60, anywhere around that area. We got to play it as we see it. We're gonna be patient. We got a couple hours in the opening of the market. It's been kind of slow. I took a couple of scalp positions, but I'm really waiting because I like to go after bare minimum 50 pips, 100 pip positions. That's my strategy. That way I'm able to use smaller lot size and go after more pips, right? And I make the money by getting the pip gain instead of using the money to try to make money. What I mean with that is I don't go into this saying I'm gonna trade a 10 lot position and just try to get 10 pips to make $1,000 in 1 second. If you're wrong and it moves 60 pips in the other direction, you just lost $6,000, right? Or you gotta wait and hope it come back to either break you even or put you in profit. My way of doing it is I say, okay, if I'm going for 100 pips, if I bet 0.05 lot size, which is $5 per 10 pips, right, or $5 per $1 in price change, and price changes $20, 20 times 5 is what? I made $100, but I only risked $15 because I'm gonna risk 30 pips for my stop loss, right? So 0.5 or 0.05 lot size, right? If I were to lose and get stop loss at the 30 pips, I'd only lose $15. But if I hit all of my take profits, right? If I hit all of my take profits and I get the whole 100 pips, that's going to be $100. You know what I'm saying? Or the whole 200 pips, $20 in price change, right? Then I just took and I made $100 by only risking $15. So that's what I mean when I tell people that I trade with. My accountability partners is what we can call each other, refer to each other as. I generally tell them we want to risk a portion of what we're trying to win. $15 out of 100 is 15%, right? So that's better than a 3-to-1 ratio. But we generally want to look for a bare minimum a 3-to-1 ratio. So if my stop loss is at 30 pips, right, then I'm looking for 90 pips. I'm looking for a 90 pip position. If my stop loss is 10 pips away, right, I'm looking for a 30 pip position, right? Because I want to have a 3-to-1 ratio, right? I want the risk reward ratio to be 3-to-1. I want to risk 1 to try to make 3. That's the goal. That's the way to stay profitable and to keep your losses from not affecting you as much as they would if you were using some of the other strategies that I've seen out here. I used to be a no stop loss trader, but no stop loss means there's nothing there to stop your loss, and it's gonna keep going, keep going, keep going until you can manually stop the trade. And a lot of the time, if you didn't have a stop loss on this candle, you probably blowed your account. See, those people that like to trade 50 lots at a time, no stop loss, and they want to try to just get 10 or 15 pips. What do you do when the market goes 400 pips the other direction first? It'll kill your account. So you don't want to play like that. You always want to make sure that risk management is more important than making money. It's more important to keep the money that you got in your account than making some money. Because if you lose the money in your account, you ain't got nothing to trade with. You got to go back in. We always want to manage our risk, make that key, make that the most important thing as a trader. You want to always make sure that you're managing your risk. You manage your risk by using small to moderate lot size, right? And you do that by using a stop loss, point blank, period. A lot of the big time losses that I have had in my journey are 9 out of 10 times because I didn't use a stop loss. I didn't use a stop loss, and something like this caught me because these days are gonna come. You can't see that coming. So if I got $1,000 and I'm betting a 1 or 2 lot size, right, and the market do this, my account is gone. That account will disappear like that. So once again, the cloud confirms the analysis because generally the candles come down through the cloud, right? The green cloud and up through a red cloud. So generally speaking, what we're going to be looking for tonight is for price to move around in this zone until price falls into this cloud, right? And we see we got one indication that will happen with the lagging line starting to come through the candles, but it can get away, and it's got a long way to get to that cloud. So I think we're going to see a little bit of sideways action with some ups and downs, and then we're going to get a push up, a real hard push up to this resistance level, and that resistance level is going to throw the market back down to find resistance at this lower level, pretty much where London and all of them left off last time. If we could look here, that's where London and Tokyo left off last time, and kind of the same type of stuff been going on. But I do think that Tokyo and China have gotten back into the game. Gold had got kind of bearish because China just stopped buying gold. China just stopped buying gold. I believe that they finally realized what the U.S. was doing and manipulating the market to keep the dollar index concurrent with gold. So China said, okay, we're going to try to throw that off by just completely stopping buying gold. And I believe for June, China just basically didn't buy any gold. And you guys could do a little bit of research on that. I spend time looking into that type of stuff, and that's what I found to be the issue why gold stopped setting higher and higher and higher highs. It's because China realized or became aware of how the U.S. was manipulating the markets in order to keep the dollar strong, right? And gold is the place, man. I mean, even silver's not doing as good as gold. So if you're new to trading, it's an excellent place to be because there's always money to be made in trading gold. There's money to be made in a lot of these different things, and we can just look at some different charts for the sake of things being, and my first round was gonna be to Bitcoin, and I have been. I probably considered a crypto hater, but I ain't mad at that, right? I can recall when gold did this last, Bitcoin did this last push up towards the all-time high. I warned people that they were to get rid of it at that time. I told uh, everybody that I know that's into crypto, I told them on this pump, get rid of your crypto and you buy it at a lower price. And then you do it again. You don't buy this stuff and hold it for the rest of your life. And we can see I'm not just talking. I've been charting Bitcoin for a while. I've been trading Bitcoin for about 4 years. Crypto is probably one of the first things in the market that I actually started to buy and sell, right? Because I saw that it was some easy money to be made, right? But I just think that the market is a little bit too manipulated. I stopped trusting crypto when Elon did that pumping up on Dogecoin and SHIB and Bitcoin. Elon Musk basically did a pump and dump all on his own and went and bought a goddamn space rocket company. And now every time you see crypto take a dump, Elon go to firing off rockets and spaceships and stuff, spending all that good crypto profit. All the people left holding the bag. So, as with any of these things, we buy low and sell high. Same thing with gold, right? We had a high point in the zone. So let's tell us we sell high. And then come down to a low point in the zone, you buy it. Buy, sell, buy, sell, buy, sell. That's it. But sit here, I leave the chart on and I'll come in from time to time. And I will try to stay here in the market with you guys till about maybe 12. I think we're going to get some good movement tonight, whichever direction the market decides to go in. We will be here ready and waiting. If anybody have any questions, I don't think. Oh, I can see questions or comments. I heard that they disclose how much they actually produce. What do you? I'm What do you mean by this? Put it in the chat. I heard that they don't disclose how much they actually produce. What do you mean? Produce what? If you still the times China mines a lot of gold too. China does not, to my knowledge, China doesn't mine a lot of gold. China spends a lot of money in Africa on gold. Most of the gold is coming out of Africa. They buy gold from Africa, and from what I know, everywhere produces gold. Gold is a product of the earth. So we can go to our local beaches and oceans and all of these different things and lakes that run through certain types of soil, and you can find gold just about anywhere. So gold is a part of the earth. It's a natural part of the earth, and it can be found pretty much anywhere in the ground. A lot of my research and just going into some historical things, my research shows that Africans during the supposed time of slavery, right? And that's a whole nother story. But Africans during this period that they say Africans were slaves in the United States, I have found actual records of Africans coming over here on ships in search of gold because they said that the United States was particularly the west coast of Florida. We find a lot of these beaches and waterways in Florida named after Spaniards. But when you study these Spaniards, you come to find that the Spanish, they didn't have any ships. The Africans had the ships. That's complete. I I don't agree with that. Uh, well, you say that you saw an article that said the top three gold producers are China, Russia, and Australia. I don't agree with that. I know, and just from me with something I got going on, I know that Africa has an endless amount of gold. Endless amount of gold. You can pretty much go to some parts of South Africa, and if you got the tools, you can go just get gold out of the waterways. And I actually got something that I'm doing coming out of South Africa, and I just don't agree with that. I know that China and Russia and Australia are all buying our gold from Africa. They are all. China actually, up until they stopped buying gold last month, China was one of the leaders in buying gold from Africa. Russia also, they might be, and when they say produce it, they may not mean that they're digging it out of the ground, mining it. If you look up and find the largest and most productive gold mines, you're going to find them in South America and Africa. If you get over into China, Russia, maybe Australia. I don't know too much about Australia, but China and Russia, they got a bunch of ice. Not to say that the ground isn't the earth also, but I think the top producers in gold are going to be Africa and South America. Um, I don't know about Russia and China as far as digging it out of the ground. Buying it, I know that they have all been buying tons and tons and tons of gold. So I don't know about producing it, right? But Ecuador is in South America or Central America, you know? Right. I agree. I agree. When we talk about who the big dog is, though, it's Africa, undoubtedly. And we're talking about diamonds, platinum, silver, anything. Um, and what I learned recently with a deal that I'm involved in is that gold, silver, platinum, palladium, and possibly rhodium are all found in the same mines, right? The gold, they put it in heat to separate the silver, to separate the palladium, and to separate the other metals that are found with it. But gold and silver and all of this stuff is it's pretty much produced in the same spot and in the same mines. And we got a contract dealing with the gold. They burn everything off, and then they send us the gold dory bars, and we take those to refineries. They test it, and then they melt it and make it into the pretty nice uh, bars that you buy from these mints and all of that. But I'm of the understanding that pretty much when you find these things, you have to take them through a process to separate them. When you find them in their most purest forms, and when you're gonna be finding bulk pieces, I ain't talking about shaking a pan on the side of a river finding little crumbs of gold. I'm talking about locating actual boulders and big blocks with gold infused in it, to where that they have to burn and take it through these chemical processes to get the other elements of the earth off of the gold and separate, okay, gold here, silver here, platinum here, palladium there, rhodium there. But these mines, if it produces gold, 9 times out of 10 it produces gold, silver, platinum, and all that other stuff. I agree, Doc. I am. If you would ask me, Africa is the king of everything when it comes down to uh, the elements that human can most benefit from on the earth. You will never find nowhere that is more rich with those minerals as Africa. Diamonds, I watched a show about how the Africans would have, of course, in this country, they call them pirates and pirate ships, but the United States had their ships sailing around the Ivory Coast, right, which is the west coast of Africa, and they would have these big, like basically vacuum cleaners on these ships, and they would just be riding up and down the west coast of Africa, sucking up all of the pure diamonds that are washing out. I can't remember the name of the river, but there's a river that flows through certain part of Africa, West Africa, and then it lets out into the Atlantic Ocean, right? And they would bring these ships through, and they would actually just have these. You can probably still Google this and find this on YouTube, where you can find these videos of how they had these Africans that were on ships. They were referring to them as pirates, right? But when you think about it, they're at home, and the people from this country are there, and they're just out there sucking the diamonds up and taking them and going to sell them and not giving those people nothing. So they would run them off, rob them, or whatever. And in my opinion, all fair in love and war, you know. But I mean, literally, if you can make billions of dollars just from riding around the coast of Africa, imagine what the land is worth. And we ain't trying to get into no geography class, so world history. I'm gonna have to, I'm gonna have to find out how to share and give the link to people so y'all can be on and comment with me, because I share this to YouTube and Facebook from StreamYard. So once I learn how to work this a little bit better, I'll start bringing, some of y'all that's, especially y'all that's in the training, I'll bring y'all up and we can, have discourse. I gotta get a little bit more familiar with this though. Um, but as we watch, we see. Let's go back to our chart for a second and just verify one of the things that we said. Well, I always said that earlier that indicators act as support and resistance. Y'all see when the candles came down and got near this, they found support, right? It ain't gonna be long. We just basically got not a lot of volume, not a lot of action in the market. In the next 30 minutes, we're gonna see some movement in the market. And I particularly think it's gonna go up before it goes down through this cloud. I could be wrong, but generally that would happen. I call it a dead man kick, where the Bulls get their last uh, shot at glory. But what kind of takes that thought away is this lag line breaking through these candles. Sometimes it'll go sideways and then come back out of the top of here, give it enough to give you that last little push. And generally, when Tokyo comes into the market, they just cause havoc. Australia starts the market off at 6. Tokyo comes in at, I believe, either 8 or 9 o'clock. And once they start getting going and get their momentum in the market, it's generally a recurring event where the market will push up, and then around 2 a.m., the market will fall drastically. So we'll keep our eyes out. Um, any questions, y'all can post them in the chat and I'll answer them while we're here, while I'm on cam. Y'all see, I got my coffee, so I'm in it tonight. If y'all trading with me, be up. I'm gonna probably I ain't get a lot of rest today, so now I don't think I'm gonna be up too late. But I'm gonna bare minimum be up to about maybe 1 a.m., 2 a.m. because I want to catch the push up, and then I want to catch the dump, and then I'll be good until in the morning in London, New York crossover. So if you're in the signal group, once I come up with exactly what I think is gonna do, I'm gonna be seeing that we get a signal in the group. But But we don't want to just say, okay, this is what we think is gonna happen, so we're just gonna put our trades in now. No, we want to wait and kind of see what the market is gonna do. Right. That's what we want to do. And that's why a lot of times you see us come with a sell position than a buy position. Or a lot of the times I will, and it just depends, but even if it's a bullish market, I mean, when it's a bullish market and the market is in a downtrend, sometimes I still take buys, because I'm of the opinion that if the market is bullish, you buy it. The market is bearish, you sell it. But what determines that? The time frame that you're trading on, right? Because if I go to a 1 minute, I'm bearish, right? I'm bearish. If I go to 1 hour, I'm bullish. So it depends on what time frame you're trading and how you're gonna see the market. I'm, Let me take this comment down. How do I take that down? Okay. I'm learning, y'all. I'm learning. I'm learning. We'll get it. We're gonna be the best at everything. I'm gonna come off cam for a minute. I gotta warm my coffee up. And I'm gonna start on my other chart that I have here, looking to see where we're gonna get in, where we fit in. Keep your eyes on the chat, Telegram chat. Um, that's where we will get our signal. And good luck tonight, traders. Let's extract us some pips. We in the zone, y'all. We should find support right around here. Keep your lot sizes small. Manage your risk wisely. No more than 30 pips on the stop loss. And we just look for our analysis to play out. Generally, when you're trading, you just want to make money. So if it's blue, that means it's profit. Never a bad time to take your profit. What I was kind of looking for was a little bit more of a bounce off of the cloud right here, but it went down in it. We're gonna see if we find some support and then come up. We got on the 15-minute, we got a little equilibrium zone right around here. And just generally dealing with the nature of this market, you know, past results don't guarantee future or present results, but everything looked good for the position. By patience right now. Generally in this market on Sundays, at most nights, you start to see a little bit of a bullish push to close out or to start off or kickstart the crossover between the Aussie market and the Tokyo market. Like I said, China, Tokyo, Hong Kong coming to the market, and we want to see them buy gold. We want to see China and Tokyo buying gold, pushing the price up a little bit, winning the battle between the Australian market. You know, the Aussies want gold to go down, so they fiat can have a little bit more power trading in the world. But Tokyo generally, you know, will smash that out. So you just want to be patient. It's a good entry zone for a buy position. If you look to scalp it, when I say scalp, I mean anywhere from 15, 20, 50 pips, in and out, in and out, in and out. And when I'm in a position like this, I generally, once the market start moving the direction I'm looking for it to move in, I'm gonna buy, sell the trade when it beat resistance and start looking like it's coming back down. When it come back down into this zone, I'm gonna buy it and sell it, buy it and sell it. That's scalping. So you take each one of them up and downs and make you, you know, a little bit here, a little bit there, a little bit there. It look like you're making a lot of trades, but you're really just picking apart and getting what you can get out of the market without a lot of movement in the market. Now, if it just decides to run up, good job. But generally, we want to get 15, 25 pips out of a position when we in the market. That will suffice. Just think if you get 9 positions with 20 pips, you just got 180 pips. All right. But it's a lot safer. You're risking a lot less because you're holding the trades a little less time that way. And, you know, you can get to your goal. It take, you know, a couple positions, but you can get your pip goal, your dollar goal, or whatever by just doing that right quick. If you do choose to hold a position and you're looking to get everything you can out of it, you just gotta always remember as your trade goes into profit, you want to be moving your stop loss up. You know what I'm saying? To either break even on the trade or close the trade and profit if the market were to reverse on. So that's what we want to do. If we do see the market go up in the direction that we got charted, we want to, as it goes up, if you decided to take a position, you want to move that stop loss up, right, and lock in to where if it reverses, you don't lose, right? So that's going to be setting your stop loss at a break-even price or making your stop loss equal to your entry price once your trade is in profit. From there on out, if the trade moves up 50 pips, you move your stop loss up 20. Every time it move up, you move your stop loss up, and you're locking in the profit from that point. So as I said, we wanted to look to enter a few seconds ago. We had a quick about 15 pips right there. Nice scalp. I didn't close mine though. I'm gonna try to get me about I believe I could get 25, 30 pips out of this position. I do believe we get a little bit of a push upwards. It may not go all the way up to that sell zone, but we're gonna get some type of a retracement soon. I guess we could say we hope, huh? But yeah, you just gotta trust your positions, man. Don't be afraid of getting stop loss because it's a lesson. It just depends on what time we go to. How it's gonna look. Go to a 20 minute. I like a 20-minute chart also. I like to view the market from a 20-minute chart. This kind of show a little bit better that support around 2380, which is where I would put a stop loss if I got in at this price point. That's 30 pips. You know, generally support, right? So patience time. Go back off screen and sit here and sweat my trade. I'll be back, y'all. I won't be here till about 12. We got about another hour that we'll be here together. So if you got any questions, just put them in the chat. I'll see them and I'll reply. I'm sitting here with y'all. Give y'all a little explanation of what's happening and where we at. We hit the equilibrium zone and we're kind of sitting in it right now. If you look to the left, right, we see this the last place that the buyers came into the market right here. Right, so that's what's going on. And our expectation, as far as what we see in the analysis, is that the buyers will gain control of the market again. Right? That ain't nothing guaranteed, but that is what our analysis is showing us. We'll go up a little bit in time. We can kind of see it a little bit better from this chart. It looks a little bit better from this chart. The only thing I don't like about position is the way the Bollinger Band looking right now. It's kind of just looking like this trend is going to continue down. So make sure we got our stop losses in place. If you got in at the bottom, when I hit down now, I was able to hit a couple quick, I believe like about 20 pips, 25 pip positions right quick. And got the buy limit, pick me up here in a few. If it come down to 2381.75, two more positions in there, it's going to open up if it touched that zone. I got one position that I left open that I was going to hold. So that's generally the way I'm in and out of the market. I get my 15, 25 pips, and then if it looks like it's going to hold, I hold. But right now, on this 20-minute, it's looking like the bears kind of got the momentum, and they might not be willing to give it up. But I'm still confident in my positions. When we go down, it look a little bit better for us. Like right here in the short term on a 5-minute, which is where I generally will watch my positions. It looked like we got a red cloud and we're gonna go up through this horizontal, right? My Bollinger Band is looking good. We're just now about to break the EMA at 10. And that is a real good indication if we break this indicator right here. If we break that indicator, then we're looking good. I'm going to hold on for a while. That's my analysis. So we're going to watch it right here on the 5-minute for a few. And just see what happens. I think we're in a very, 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 very position right now. We're going to get us some pips if it breaks. So I feel if we break past, if we get to 2385, we'll come to this sell zone. We break about 2385, which is the middle band of the Bollinger Band. If these candles go on top of the Bollinger Band, see how these candles, once they came under the Bollinger Band, they started falling. They break back and get on top of the yellow line, which is what we're anticipating. You know, a good thing for us. But if we get back up on top of this Bollinger Band, then we'll go back into a bullish momentum, which I think will happen. Generally, another thing while I'm on the 5-minute, I chart and analyze on the higher times, and then I watch my trades and maintain them on the 5-minute. I exit from the 5-minute. I really use all of the charts. I don't suggest beginning traders use the lower time frames because you can kind of get fooled by a short-term chart, a real short-term chart. Now, cryptos, I suggest trading on a low time frame chart, very low. You can go down to seconds with crypto, especially Bitcoin. I'm terrified of trading Bitcoin on this market. Now, buying and holding it in an exchange, okay, but trading it with lots, oh my God. Don't do it. Don't try it, y'all. You got to be good. You blow an account quick with Bitcoin, it move like US 100 or US 30 or some of them stuff. But if you're trading Bitcoin in the foreign exchange using lot sizes, oh my, you're going to be in trouble. You better be quick and good. Your analysis better be right. But I think we look good. If any worst case scenario, we just banged out 25 pips. It didn't come down and pick up my other two positions. But I ain't mad. I got one left. If it dipped back down and pick me up, it's all good. If it don't, I take what I get from this one position. One thing I don't do is I don't chase the market. It came down to where I was looking for it to come down to. I put the positions in that I wanted to take, and I'm gonna live with it whichever way it goes. I'm not gonna keep just stacking trades and stacking trades. That's when you get greedy, and that's when the market gets you trapped. We're looking good, confident. If these candles come on top of this yellow band and then the Bollinger Band open up, meaning the green band point up and the red band point down, then we're gonna see a good push. And one thing to be mindful of is that I do think that gold will set a higher high this week than last week, right? Which is pretty much where we at right now in this zone. The high for last week was right there, 23.92. So I do believe it will set a higher high this week. So with buy positions, what I'm gonna be doing, and I don't, I'm just sharing what I'm doing. You gotta if you got a little experience and you know how to do it, do it. If you don't worry about it. Hold your positions, close them when you feel like you got your profit. But one of the things I do is because I do move my stop loss up as the profit goes up, you can move your take profit up also and allow the trade to keep going. And sooner or later, if it keep going, your stop loss will be at our take profit 3, and you just follow it up. That way you don't have to keep paying commissions on trades because every trade you take, you pay for it. Every trade you take, you pay for it. So a lot of days you done took a bunch of trades, and if you're using the wrong lot size and not getting enough pips to cover your commissions, it'll seem like you ain't make no money. But what's happening is all your money is in the spread. So kind of make sure you profit from your trades. If you're getting a signal, what you want to do is you want to try to get in as close to the bottom of that entry range as possible. That way, if the market only gives you a little 25, we got from 81.62 to 84.20. So that's almost 30 pips. So that was a decent trade. If you had 3 positions, that's 90 pips. And one little push that really ain't give you a lot, but just by having a plan, right? When you want to get in the market and what you think it's about to do, that way you can get off whenever you want. You can take your money out whenever you want, close the trade. But generally what I want to do is my stop loss on the one position that I have is at my entry price. So I won on 2. Hold on, let me make sure because I might have had about 4 trades. I just be talking. 1, 2, 3. I had 5 trades, so I closed 4, and I got 1 open. I got 1 open, closed 4. I got that's 20 pips. That's 15. About 10 on one and 10 on another. And then I'm holding one. That's right now about 28, almost 30 pips in profit. So all I'm going to do is just move this trade. The stop loss, I'm just going to move it up as it go up. If we get another 30 pips from right here, then my stop loss is going to move to right where we at right now at this price. You know what I'm saying? And then 30 pips from there, my stop loss moved to the previous price. And that's just always being able to lock in some profit. You always want to lock in some profit once you go into profit. Don't let the trades turn around on you and go red. Worst case scenario, you want to break even. looking good. Got about 30 more minutes. I'm gonna be here with y'all, but I'm particularly feeling good about this position. I think it's gonna look a little more like this because it's gonna come through this part of the cloud. Right? In my opinion. So we'll probably see a little bit more of this type of thing. It may even come dip down even further. It might dip down even closer to our stop loss, which in mind is gonna pick my other two positions up. Keep using this wrong. Hold on. Once I click off of it, start over. But what I do think it's gonna do is I think it's gonna push up a little bit. It might push down, whichever way, but it's gonna go sideways a little bit and then up through there. It's gonna go through this part of this 5 minute cloud though. This body part where it's sideways or possibly even over here. I don't think we got enough time for it to have to get all the way over there, so it's probably gonna come through this thinner part. But I do think we're gonna get a push here real soon. It's gonna be fast. And then it's gonna go sideways when they get up to the top. And then we'll see a drop. Even if it don't go all the way up here, it's gonna push up. It's gonna come through this cloud. It's gonna bare minimum just poke its head out the top of this cloud. So that's why I say if we break around 85, 86, we'll get all of our outcomes from the signal in the group. By patience now, if you're in, I'm gonna take this stuff off just so I don't save it on my chart. It'll throw me off. I'm just taking it off because I'm about to save. I'm about to save my analysis. And you do that right up here. Where you name it. You see I got it. Winner, baby. That's the name of this chart. But as y'all can see, I went in the settings over here and I changed. If you got trading view, I changed everything and kind of color coded it. I put a black background so everything will stand out and I could really see it. Kind of work a little bit better for me instead of the gray or white that I've seen people with. Because I like to use white lines. I like to use colors and color code everything. So if you look at my chart, everything that's gonna be bullish is green. Everything that's gonna give me a bearish signal, I make it red. Just like the green bullish candle and the red bearish candle. The green bullish side of the Bollinger Band, the red bearish side of the Bollinger Band. The yellow neutral is part of the band. So everything's color coded. I make these lines blue so I know what they is. Blue represents my understanding of equilibrium. Some people call that support or resistance when they mark their charts this way. I refer to it as equilibrium because you see when the candles got to this indicator, that indicator acted as a bit of resistance, and now that price went over it and is bouncing on it. It's now support. That's what I meant when I said the indicators I use as support and resistance. See how the candles came down, found support, right? When they found support, they started to go sideways instead of down. They went up, met resistance. You got the wicks right as they come in contact with this indicator. They went over, and now you got wicks on both ends. You got a wick from this one, you got a wick from this one. So it found resistance there and support here, which we can kind of watch right here. And sometimes you see your indicator act like a little diving board if it finds support on the indicator. See, just watch the price go back up. You're going to see that white line kick it up. The white line will bounce up if it go back up on this candle. But generally, you'll see it. You see the white line, how it bounce down and bounce up. See, that's showing that resistance came in, or the sellers came in. But the indicators are act as support and resistance. That's why I don't mark support and resistance on my chart. I don't have to determine that. The market is going to tell me that. And that's what I use the indicators for understanding of that. So I know that as long as this line is going horizontally, right, or even close to it, I know that price ain't going to just, well, I ain't going to say it ain't because, like I said, we can get 1,000 pips in 2 seconds with gold. But I know, generally speaking, with the ebb and flow of the market, price ain't going to break this red line. As long as it's going horizontal. You see what I'm saying? You see, as long as this line is horizontal, the candles kind of stay away from it. But when it point down, that being that the candles on the bottom half of the Bollinger Band, if this line was to point down, then we would know that price is going to drop. But what will happen also is this line will point up. So being that this is going horizontally and this is starting to point down, I'm becoming even more confident in my position. I'm going to go up in time and see how we're looking. I'm becoming more confident in our position and us covering our what we're looking for. We see the Bollinger Band. It ain't started quite going horizontal yet because this is a little bit longer time frame, like candle. But we do see this starting to go sideways. It did act as a little bit more resistance on the longer time frame, but we're waiting for this to start pointing down. This start pointing down and this go horizontal, we're in good shape. Now, if this points down, this points down, this points down, this points down, we're in trouble. Well, we ain't in trouble because we got our risk managed. You know, everybody, if you got in a position and you got in down here in these wicks at the bottom of these candles, then your stop loss should be at break even. Like right now, I can't lose. I can lose if my two positions that I have sitting waiting, if it come back down to 23.81.75 and pick up my two positions, right? And then it stop loss that, I can lose that, but I'm confident in the position from here. I really am. 15 minutes, you know. In my opinion, we want to see how this turns out. If this cloud closes off and turns red, we got an issue. Or we looking for sales. If it thin out, turn green, this top line point up, price gonna go up and pretty decent. Got 30 pips out of that. And I think we're gonna be all right. I think it's gonna possibly come and pick up my other two positions. And I have three positions. And I'm gonna hold them. I made 4 trades. I got probably close to 100 pips. So if I get banged on them three trades or 2 trades, because one can't do nothing but break even. So that'll break even. If I get banged on the 2 trades, that's 60 pips. So it's 30 pips stop loss. No, it ain't even 30 pips. It's 100. It's 30 pips total. Because my stop loss is still the same as before, 23.80. So that's 30 pips total that I lose, taken from the 70, and the 100. So that leaves me with 70 pips. I'm in profit. So I'm pretty confident in what I'm gonna do. I'm not gonna touch nothing. We got about 20 minutes. If y'all want to just watch the charts with me, I'm gonna be here. I'm about to go off screen. We got my phone going off over here. The dog bark sound. That's my notifications. But yeah, that's it. We got us a little something out of the night. I really didn't want to take that sale. I would rather wait on it to come to us in the next equilibrium zone down and either scalp the buy or ride it back up until it come back into that other equilibrium zone that is a sell zone. This is a buy zone. Well, no, it's not really even the buy zone that we're looking for, but it's the buy zone short term. We really, 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 I'm going to be waiting for this sell. I want to get a little bit more info and see where the market is going to push up to. And then I want to take the sell because I think the sell is going to give us about close to 300 pips. I think it's going to go from 23.90, whatever it fall from, to about 23.65. I do think it's going to drop down now. But I think we have a little bit of a bounce back out of the top of this cloud before it falls down. Something like it did right here. It came down, touched in the cloud, and went up, and then it came through the cloud over here after it got real thin, and then it came back through the red cloud. Something similar to that. Boff Cam, thank y'all for stuck it out with me. I appreciate y'all wanting to understand a little bit more about how I see the markets. And really understanding that it's about patience. Just remember we knew that price was gonna come through the green cloud. What we're trying to do is catch it. I call it a dead man kick. It's where the market is dying, and then it give you that last kick or twitch, and then it die on that. Just because like the body of the cloud is the momentum, which is represented by the body of the cloud, is just too much. It still got a lot of bullish momentum, meaning a lot of these buyers still got their positions open, anticipating the market to go higher. So that's why this cloud will look like this as opposed to right here, where it just had a little bit of bullish momentum. This part of the cloud, right, represents this bullish push. So that's why we got a little bullish momentum right there. It's just a little bullish cloud, right? And then this big wide body bullish cloud represents this major bullish push, right? So that's just another way to read the cloud. The cloud is nothing but an illustration of the candle pattern, right? So it's not giving you no more information than this candle pattern. I'm going to show you a different version of the cloud. And I used to trade with this one all the time. I'm surprised I don't have it up there. This one right here. It's called however you pronounce this, Kuratoga cloud. It's what somebody else took the cloud and added their own edits to it. But see, I used to like this cloud because I felt like it was a little more accurate. You know, I felt like it was a little more accurate because I'm gonna turn them both on and I'll show you the difference. See how the Ichimoku is way over here and the Kuratoga is over here. The Ichimoku is supposed to be, don't hold me to this, but 26 units ahead of the candle pattern, even though it's an illustration, in my opinion, of the candle pattern, right? With other information in it, but just keep it real, real basic and simple where we can understand and use it. It's an illustration of the candle pattern. Or it's like saying if I had to explain this to somebody, right, with a picture, it would be the cloud. Right? The difference is the Kuratoga cloud, he doesn't put it out 26 units ahead of the candle pattern. he puts it a little closer. I don't know the exact measurement, but and his cloud illustrates the candle pattern a little bit better. And what I mean is, okay, when you got a bullish cloud, you want to look at the green line that outlines the cloud, right? When you look at that green line, it is pretty much an illustration or a line chart version of the candle pattern, right? And then you got an identical one, right, showing you the sellers as they were in the market, right? So now, as long as you had this long push, right, upwards, the sellers was flatlined, right? And now what you see is the sellers came into the market, and you get this line up, and that's why we get this line down. If that made sense. Turn that off. And we're down to one person, so we don't got to hold each other up for the night. I thank you for waiting with me. We're gonna go get out of here. Set your stop losses at break even. If you plan on re-entering, manage your risk wisely. Use very small lot sizes. Don't move the stop loss any lower than mentioned previously. Don't give it no more than what you or what's already prescribed. And I will see you Wednesday. Good night.